Huh. Well, now that's kind of interesting. I wonder how many of these you could do. Let's go up just a smidge. Right there. Here we go. Here we go. Yeah, yeah, yeah. All right, so. All right, we'll put that there. Streaming. Dividend stock talk. Dividend. Oh, okay. Huh. Okay, so let's get there. Let's get there. Okay, we are ready to you, fucker. I don't know what the hell I'm going to do over here. Alrighty. That sounds interesting. Let's see what's happened here. Yes, and yes. Hey, we're getting ready to get started. You got to turn this around so we can see it normally. There we go. And we're going to slide this over to here. Slide it on. Just to move it on over. Just to slide it on over. Move over, cool dog. A hot dog is rolling in. All right. Hey, James, can we look at AMD? Yes, we can. AMD. Advanced Micro Devices. Oh, my goodness. Good evening. Michael, how are you today? AMD is going to be first on the list. Moderation helps everyone. Be safe, positive, live. Okay. Okay, cool. All right, that works. All right, hello. I am well. Hope you are also. Yes, I am. Poppy, how are we doing today? AMD. We'll take a look at that one in a bit. All right. Having an issue with Instagram. All right, C-Man's in the house. Billion. Techie. Punit. All right. Golden Nuggets. Jordan. Kata. Okay. Byron. How you doing, Byron? Gamer 77. Cool beans. Jacob. Good. Rude dude. What's happening? Stephanie D. What's happening, Stephanie? Home by the beach 2. Cool. Matt, Bob, Lisa living a G. I have no idea what that means, Lisa, but okay. Macaw Lombardo. What's happening? Brian wants to take a look at Nike. NKE. All right. Let's get rolling. Let's get started. I have about 8 or 9 stocks to take a look at today. Look at it. We're up to 172 already. Cool beans. Sadat, how are you today? Mary Jack's out. Ooh, Brian wants to look at Pfizer. Brian, how are you today? Look at Pfizer. We'll take a look at that also. Uh-oh. Team Snagging Whiskers. Hey, James, I see you trade Riot. It doesn't seem to meet your requirements. Can you explain why Riot meets your list, sir? Oh, well, but of course. See, here's the thing, okay? Now, if you were listening for a while or you listen to a lot of my videos, you will see that I trade Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list, and I have a few other traders that I actually follow along. Now, every single stock on my list, well, my personal list, yeah, they have dividends over 22 decades, 20 years, okay? However, there's a lot of stocks that I trade that are on Warren Buffett's list that aren't on my list, okay? Now, just because, I do trade certain stocks once in a while, say Apple. Apple's not on my list, okay? It doesn't have 20 years of increased dividends, but I still trade it anyway because it's on Warren Buffett's list. The same thing with Paramount, Riot, Riley, There's a few other companies that are on other people's lists that I respect. And that's the reason why I trade those. Mr. Darrell, how are you today? Sha, what's happening? Mary, Jack, Ruth, Little Squeeze, what's happening? All right. So, thoughts on Riot. We'll take a look at Riot also. Riot. All right, we'll take a gander at that one. Carvana. You see, you gotcha. Okay, cool beans. Now, Carvana, I'm not 100% happy with them. Okay, they're not been here long enough. Can we do ADM? Yes, we're going to do ADM and we're going to do AMD. Okay, there's a difference between the two because someone asked me to take a look at AMD. Okay, so we'll also look at ADM. Now, ADM I trade, AMD I do not. So let's take a look. We'll drop another 100x, play in the private shortly. FOMO Fusion, cool beans. All right, so let's get started. Let's get rolling. Let's do the introductions. Good evening, ladies and gentlemen. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow. Now, I'm looking for a simple, safe, predictable, consistent 1% per week. Now, in order to be able to do that, I'm looking at specifically dividend stocks that have consistently increased their dividend payments to their shareholders. Why is that important to me? Well, a dividend is a portion, small portion, okay, little small portion of the profits. So if the company is profitable, they'll take some of those profits and they'll pass them along to the investors. Well, that's us. We are the investors. We buy, we sell, we become the investors. All right, so that being said, let's get on. Now, I only have two criteria when you guys ask me to take a look at stocks. Number one, make sure the company is consistently profitable, okay? I like 20 years, me personally. So if you want me to take a look at something, make sure it has profits, okay? That's number one. Number two, make sure it has weekly options, because when I want weekly cash flow, there's only two ways that I know to get weekly cash flow. One, weekly options. You'll see them. We will talk more about those a little bit. But weekly options or sitting in front of the computer all day. No desire to do that whatsoever. Thank you, but no thank you. I did that when I was younger. Nowadays, I would prefer not to do that. All right. Got to drink my tea. All right, let's get to see what we have. Team Snagging Whiskers, looking to buy into Harley Davidson and Intel. If you have time, we'll take a look. Because I actually have Intel, INTC, and I have Harley Davidson, HOG. All right, let's continue. First and foremost, let's take a look. Well, we got U.S. Steel up, so let's take a look at U.S. Steel. All right, let's go take, oh, shit, we got 50 more questions. Okay, so let me explain something briefly before you guys get carried away. Now, I've got 7 cameras running, okay, 7, which means I have a lot of questions coming from all different directions. If you feel I'm not answering your question, do not feel the need to post it more than once. Listen closely. I am going to answer every single question. Now, it may take time to get to yours because remember, there's 7 screens and about 8 platforms I'm broadcasting to. So if your question takes a while for me to get to, but I will get to each and every question. All right? So let's start off with U.S. Steel. Now, I follow a certain formula every single time. And I'm going to show it to you right here, right now. Okay, first thing I want to look at every time I look at a stock is the 1-year chart. Okay, that's it right here. Now I'm looking for 5 things. Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it now? And number 5, you take your little finger like this, and you go, look at this, sideways, down, up, sideways, down, and back up again. Okay, simple, Easy. Now, it doesn't look that bad. When I get to a bad one, I'll point it out. But this one, not bad. The high's way up here, the low's way down here, and we're right about there, somewhere in the middle. Okay? Second thing I want to look at, after I look at the 1 year chart, I want to take a look at the numbers. What do I mean by the numbers? Well, simple. What am I buying it for? Okay, so tomorrow morning, first thing Monday morning, here's the current price at this moment in time, $34.20. Now, if you don't know how to read this, it's really not that difficult. It's kind of like riding a bike, driving a car, or some other activity. You take one piece of data at a time, one little tidbit of information. Okay? One little bit of information. First one, the last trade of the day. Well, that was the last trade of Friday. Okay? The bid, the ask. Well, the bid is what you can sell it for. The ask is what you can buy it for. Okay? Bid, ask. The volume. Well, that's how many shares have traded on Friday. Okay? The open. What was the opening price on Friday? What was the high of the day? What was the low of the day? So the numbers right here, you will be able to find those in the historical data. So every year since this stock has started to trade on the open market, you will see the open, the high, the low, the close, the volume. Okay? That's what we're looking for. The open, the high, the low, the close, and the volume. Those are the 5 numbers we're looking for. Fine. Now, what can I buy it for? $34.20. Great. Now, when I say I want a simple, predictable, consistent, and safe 1% per week, well, there's only 2 strategies that I know that are simple. The first one, buy the stock. That's it. That's the simplest strategy there is. Buy low, sell high. We've all heard that thousands of times. But it's not predictable, and I have no idea what's going to happen with it. So the second one, it is called a covered call. How can this battery be low already? It's been plugged in all day. Damn thing. You know what? I'm not going to mess with it. I'm not going to mess with it. Just let the camera turn off. All right. See, I forgot where I was. Oh, well. All right. So I can buy it for here. The second strategy, simple. It's called a covered call. So you buy the stock. And once you buy the stock, that is yours at whatever price you buy it for. So anytime you buy anything, that's your entry price. That is never going to change unless you dollar cost average. And a little bit complicated, but let's not talk about that. But if I buy it tomorrow morning, $34.20. Now, the covered call, simply, I buy the stock. And I sell somebody else the rights to buy it from me. So if I buy it for $100, I can sell it to somebody else for $100, but they pay me a premium, and that's this number right here. Okay? So if I buy it $34.20, I can sell it for either the $34 or the $34.50, whichever one I think is best. Me, I like for safety, so I'd be looking at the $34. Now, the $34 is selling for $105. But there's a little bit of a problem. If I'm buying it for $34.20, I'm losing 20 cents right off the top. But not really, because I'm bringing in $1.05. So if I take 20 cents and I deduct it from the profit right here, that means I'm walking away with 85 cents. Well, 85 cents on a $34 stock is over 2%. Do you realize that 2% a week is over 100% a year? You can double your money every year if you get 2% every week. Who wouldn't want to double their money every year? All right, anyway. All right, so what am I buying it for? What am I selling it for? What am I collecting? Okay? Is it over 1%? Great. Now, I want to take a closer, now that the numbers work, now I want to take a closer look at the chart to see if it's the right time. Just because the numbers work doesn't mean it's the right time to buy. Because I don't want to buy it at the high, because it doesn't make any sense. When's the last time you heard somebody say, oh, look at U.S. Steel. It's at the high of the year. Let's buy it and wait for it to go up higher. No, it doesn't work that way. Okay? after it gets to a high, there's usually what's called profit taking, retracement, correction, whatever you want to call it, fine. What I like to call it is when a stock goes up and then she drops sharply, well, that's profit taking to me. Because let's zoom in a little closer and you'll see a little bit better what I mean. Okay. At the end of January last year was the high. I just started dividend investing. Will I pay tax every year for those dividends or when I sell the stocks? See? Now, here's the thing, Wolf. Okay? Now, you're going to pay taxes to the amount that you want to pay taxes. Now, the reason I say that is, well, we all know that federal income taxes to the IRS is a voluntary compliance. Okay, it means you do it because you want to. I know a lot of you probably thinking, "Oh, hell no, I don't." Yes, you do. It is voluntary, and you volunteered to pay it a long time ago. So until you legally say, "Hey, I'd like to cancel my subscription," you're going to have to deal with taxes. Okay. However you want to deal with taxes is totally up to you. Now, I always tell people, go and talk with a tax strategist. If you don't want to pay taxes, talk to a tax strategist or a tax planner so they can help you set up your accounts in a manner in which you can pay the least amount of taxes legally. Okay, I say that because that way it keeps the IRS off my back. All right, let's keep on going. The low of the year for U.S. Steel was back in early September, 2672. Well, look at the last 3 months. Troy, do I need a lot of capital to use this strategy? If you are selling covered calls, you need to buy at least 100 shares a week. Yeah, you're right. Everybody starts at a different level. Okay, so you have a certain amount of money available to you. Great, that's yours. Okay, I have a certain amount. There's like a couple of hundred people here tonight. They all have a different amount to start with. I always tell people when you're first starting, paper trade. Paper trading is nothing more than monopoly with the stock market. There's a certain way of doing it. You buy, same thing I'm showing you here, but you do it in what's called a virtual account, which means it's not real. And the reason why you do it in a virtual account first is that you understand it and you accept it before you put real money into it. Well, once you put real money into it, consistency and time is going to be your two major factors. Consistency and time. All right. The last 3 months. 5 things, remember? High, low, was, is, direction. Up, down, up. Okay, that's easy to see. Look where the bottom is, right here. Look where the top is, way up here. Look at all this space. Okay, profit taking was here, and dropped. Okay, so when you're at 43, okay, look at your last bottom right here, 37.50. The 43, that's $6. $6 on a $38 stock. That's almost a little bit less than 20%. Think about it. Even if it was 10%, there's going to be profit taking. I jump out after 1 or 2% because I'm not greedy. I want my 1% every single week. Jump on out. Well, great. Well, here's the high right here. Here's your bottom. This is U.S. Steel we're talking about. They've been around for over 100 years. They ain't really going anywhere. All right, so the last 30 days, we're looking at the 12th. There it is. Here's your last 30 days. Now, the last 30 days looks totally different than the last 90 days. Because in your last 30 days, look where we were. 35.40, drops down to 30, back up to 35.50, back down to here, and then back up to here. Could it go higher? Yeah, it could. It probably will because it's coming off that 90 day. Okay? Look at the 90 day. Here's the high on the 90 day, 42. Here's your bottom. Well, she is going up. All depends. And then you got the big question. Do I like U.S. Steel? Does this make sense? Is this a company I want to buy and hold on to? Well, they've been around for over 100 years. Where do you think the U.S. economy is going to be without steel? Think about it. Steel is in almost everything. All right, anyway, let's keep moving on. I like U.S. Steel. I actually have U.S. Steel in about 4 accounts, maybe 5 accounts. Anyway, let's move on. I like U.S. Steel. The numbers look good. Now, if I was going to jump into U.S. Steel tomorrow, you know what? Let's do a practice trade right now so you can see what it looks like. Now, I usually do 1 or 2 or 3 every night. Well, this one looks so good. Let's do it. Let's do it. Why not? U.S. Steel doesn't seem to have increasing dividends over 20 years, though. Yeah, I know, but they've been in business for over 100 years. You got to take the good, the bad, the ugly, everything that goes along with it. Okay? Now, yeah, someone just pointed out U.S. Steel doesn't have 20 years of increased dividends, but they've been around for over 100 years. They have weekly options, and everything just looks good. Look at the setup. That setup looks lovely. Okay? Now, I usually don't buy stocks unless I've heard of them or I know them or they have 20 years of increased dividends. Let's take a look for the fun of it. What would a trade on U.S. Steel look like? We're going to change this to covered stocks. Now, one thing I like about Thinkorswim, if you guys aren't familiar with this trading platform, this is Thinkorswim. Now, every trading brokerage house has their own trading platform. Okay, now even though Charles Schwab owns this, okay, this is not Charles Schwab's trading platform. Their trading platform is totally different. Okay, I like this because it has everything I'm looking for right there in front of me. Okay, I can look at the charts, I can look at the seasonality, I can look at the numbers, and I can look at the trades all at once. I don't have to jump from one screen to the next, to the next, to the next. All right, so we're going to do a covered call on U.S. Steel and see what it looks like. Currently, I want to do the 34s. Here it is. I also like about this is that they presets. I have mine preset to 10 contracts. All right, so here's the order. I'm changing it to a market order. Now, here's what the order sounds like. I always tell people before you do anything, okay, you can click it, you can see it, you can touch it, but listen to what it, say it out loud and listen to what it says to make sure it sounds right. Buy 1 covered call, UX, US Steel 100s, those are the weeklies. 17 January 25, well, that's this coming Friday. The 34 call option against the X, okay, at the market to open. So that's the order right there in that green line. The very next line down, well, that's right here, 33.06. That's the break even. Okay, if the stock on Friday is 33.06 or higher, I'm going to be in a profit. Not the full max profit, but just a profit. Anything over 33.06. All right, so my maximum profit on this one trade is 93.50. Now remember where I said I wanted simple, safe, predictable. I know exactly what I'm going to make on this trade before I even do it. And to me, that's important. Okay? All right, so if I'm making 93.50 per contract, so you have 1 contract, 93.50. 2 contracts, well, it's 93.50 times 2. Each contract's worth 93.50. All right, so let's get our calculator. Let's bring it over here so it's not interrupting the flow. Clear everything out of there. Now, to find out the rate of return, I'm going to take my profit, 93.50, and I'm going to divide it by the cost of the trade, including commission and fees. Well, it's $3,307. $3,307 and 16 cents. Okay. Well, what's the rate of return? Well, the rate of return is, let's go this way, is 2.8%. Well, it's not going to be 2.8% exactly because remember, I'm buying it at 34.20 and I'm losing 20 cents right off the top. So it's going to be a little bit less. So right around 2%. Okay, but 2% a week is over 100% a year. Okay, number one, does it make sense? Number 2, do I like US Steel? Well, I like US Steel. I have it in 3 or 4 different accounts. All right, so let's get out of that one. Now, I want to show you one more thing. Okay? Now, when I said $93.50 is the profit per contract, okay, I don't do Bitcoin. Okay, Muska, no Bitcoin. Sorry, no cryptocurrency at all. This is my profit. And the 3307 would be an all cash deal. Okay, so what if you have a margin account? Well, a margin account is going to be totally different. So let's run those numbers. Yeah, we're trading stocks and stock options on dividend stocks. Okay? No cryptocurrency, no Forex, no futures, no fast contracts, none of that stuff. Dividend investing for weekly cash flow. So let's keep on going. So I'm looking at all cash. Okay, remember, all cash, $93.50. We already did that. That was 2.3%. How long have you been trading stocks? Right, a little. I'd have to check, but I think it was, should be 21, 22 years, something like that. All right, we're going to take the profit, $93.50. Now, we already divided it by the cost of the trade plus commission, $33.07. That's if it's an all cash account. Well, what if it's margin? If it's margin, you're going to use this number here. The buying effect, buying power effect. See it right there? Buying power effect, $15.97. Well, that's a margin. Well, let's see what the rate of return is then. Divide it by 1,597.15, and that gives me a grand total of 5.85%. 5.85% for 1 week. And what does the stock have to do? Think about, here's the crazy part about it. The stock doesn't have to do anything, because if the current price right here is $34.20, right? If I'm buying it at $34.20 and I'm selling somebody the rights to buy it from me at $34, which is less than what I paid for it. If the stock stays exactly where it is, well, I'm going to make 5.8% for 1 week. If the stock goes up, I'm going to make 5.8% for 1 week. If the stock goes down, well, if it goes down to 34, okay, 34, I'm still going to make 5.8%. If it goes down below 34, but stays above the 33.06, well, I'm still making a profit. So my break even is there, 33.06. So as long as the stock's about 33.06 come next Friday, well, I'm okay. And what am I looking for? Well, I'm looking, okay, for the stock to stay right where it is or go up. So what would happen? Well, whoever bought the option from me, well, they're going to take the stock away. What happened? What do you mean? Well, now I'm going to have all my cash back. And then the following Monday, I will find another company to do. I can do US Steel again if I want to, buy it again, do the exact same thing over again. Or I could roll it forward and collect another 1 or 2%. How did you strategy in 2020 when the market dipped? Okay, I would really have to go back and take a look. But hold on a second. Hold on a minute. Okay, this is my website, That 10-Minute Trader. It has all my social media, blah, 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 all that kind of stuff. Underneath, you'll see 3 accounts, 1, 2, 3. Now, account 1, account 2, they were from January 1st, 2024 till December 31st, 2024. So that was the whole year, account 1 and account 2. Now, account number 3, we started that one in July. Okay, so it's only from July to December. But underneath that, you'll see every single trade that I make. Okay? Now, that's just for this year. I haven't done any for this year. Well, that's last year, sorry. Last year, 2024. This year, I haven't put anything up yet because we're only into week number 3. All right? So, week number 2, there was only 2 days. Week number 2 was pretty good. Now come all the way back, and this is 16, 15, 14, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, here it is, week 1. Week number 1, first quarter. All right, that's 2024. Underneath that, you're going to see this. Well, this starts at August 31st, 2011. That's how long I've been doing this. Okay, see, these are all the numbers. These basically look the exact same. Okay? Oh, look, all the exact same. Here's a video I did, 2013, 1-year chart, 90-day chart, 30-day chart. Doesn't that all look similar to exactly what I'm doing now? So when you ask me what did I do in 2020, to be 100% honest with you, I have no clue. That was 5 years ago. I don't even know what I did last year, 2023, because I don't live in the past. I just look at, I am here now. What do I have tomorrow? The next day, the next day. I don't live my life looking backwards. Terribly sorry. Do I make 1% every week? Well, yeah, I do. You can take a look. Okay, what do we have here? 1.03, 1.63, 2.7, 1.05, 1.8, 2.65, 1.7, 1.9, 2.2, 4.2, 3.3, 2.4. See, I only live 1 week at a time. I'm not delusional thinking that I'm going to live forever. Okay, yeah, more than likely I'll live to tomorrow, the next day, and the next day. Okay, but I'm not counting on that. All right, so no, I honestly don't know what I did in 2020. I don't know what I did in 2021 or 2022. But I know I consistently, and they're all written down, believe it or not, all these are written down somewhere. Okay? And if you really want them, well, maybe one of these days I'll have my assistant put up a website with every single trade that I've done since I've been tracking them. All right, yeah, but I don't track them when it consists. I'm not that anal. My 1%, I'm good. All right, so that's that. Let's keep on moving. All right, let's get out of there. Let's get out of there. Let's get out of here. Let's go back to here. Let's go back to here. And let's go on to the next stock. Holy shit, I got 100 questions. Damn it. All right, let's go through some of the questions before we go anything else. Carvana. Now, Carvana, veteran dam. Carvana has not been around for even 10 years yet. So that's going to be a no right off the top. Thoughts on Riot? Well, let's take a look at Riot, because I actually have some Riot. Okay. First thing is always, okay, high, low, where was it, where is it, what's the direction, up, down, up, sideways. We're at 1189. So 1189, well, if I buy it tomorrow at 1189, the 12 is going for 57 cents. Do you realize that's 4%? And you ask, why am I doing Riot? Well, it's 4%. But here's the thing. Just because it's 4%, is it the right time to buy? See, I don't like buying at the high, and I don't like buying at the bottom. See, what usually happens with stocks is they go, look, it's not that difficult. It goes up, it goes down. It goes up, it goes down. It goes up, it goes down. So if I like a stock, I will continuously look at it every day. Now, I look at them twice a day. Once in the morning with my private paid trading group, okay? And then at night with you guys, right? So if I'm looking at it twice a day, I have a good idea where it's going on a day-to-day basis. So if I know where it's going on a day-to-day basis, I have a good idea of what's coming next. And that's how I do all my trades. Well, let's take a closer look, because we know the numbers work. Let's see if it's the right time to buy. All right. A year ago, we were sitting at 12.29. Isn't that weird? A year ago, we're at 12.29. And where are we now? 12. All right. The high of the year was back at the end of February of last year, 1828. Here's the bottom right here, the beginning of September, right around 6.25. Woo. Last 90 days, that's the last 3 months. Okay. had a bottom down here at 850 and a high at 16. That's 100% increase. Do you see that? The 850 to a little over 16. That's almost 100% increase. And she drops and goes sideways for a bit. Well, here's where we are right now. I want to zoom in a little bit closer. Take a look at that. Last 30 days. Okay, so the last 30 days. 30 days ago, we're at 1250, shoots on up to 1450, drops all the way down to 10. Okay, so from 10 to 13, that's only a $3 move. Now, a lot of people say, well, it's only $3. No, it's not $3. $3 on a $10 stock, because it was down here at 10. Okay, $3 on a $10 stock is just a smidge below 30%. 30%. And that's a week and a half, not even a week. 30% in less than a week. Yeah, there's going to be profit taking. It came down. Who knows what it's going to do next? It looks, hypothetically, that it should be keep coming down. Do we know? No, we don't know. Well, that's what tomorrow's for. Which direction is it going to go tomorrow? So I'm not going to jump into it tomorrow. If I was going to, I already own some, but that's not the point. If I was going to jump in, I wouldn't do it tomorrow because it looks like it's coming down. Sorry. Old Dog wants to take a look at Starbucks, SBUX. Interesting. I'm going to get the hang of this eventually. I've only been doing this for about a year, so, I keep going to the wrong side. All right, here's the high, here's the low, here's where it was, here's where it is. Where's it going? Down, big drop, up, down, big jump, up, down, up again. Okay. Not bad, not glamorous, but not bad. All right, 92.66 is the current price right here. 92.66. So I'll be looking at the 93s. Well, the 93s are going from 92 to 107. That's over 1%. But what about the 92.50s? If I do the 92.50, I'm losing 16 cents. Okay, so we take 16 cents off of this. That would bring me at 93 to 127 to 1 something. So I'd rather do the 92.50s because it's a safer trade. Now, I'm 60 years old. I like safety. Okay, I like the company to be consistently profitable, and I want my trades to be on the safe side. I'm just looking for the 1%. It's not that big a deal. So a year ago, we're at now that sucks. A year ago you're at 92.50, and right now you're at 92.25. All right, the bottom of the year was here, the middle of July at 71. Okay, the last 90 days, well, here's the high, here's the low, here's where it was, and here's where it is. Look at the movement. Down, up, down, up. Uh-oh, she looks like she's turning right there. Look at that. 30 days ago, there's a high. 99, drops down to 86, shoots back up, and then you have 1, 2, 3. Look at that. 1, 2, 3 days coming back down again. Sorry, dude. It doesn't look like it's the right time to jump into Starbucks. Don't get me wrong. I like Starbucks. I do. Because, as soon as she comes down, finds a new bottom, and turns around and goes back up. So I'm going to put Starbucks down for next week. So we'll take a look at it again next week. Alrighty. David wants to take a look at Ford. Now, I did jump into Ford the other day because the numbers just look good. So let's take a gander. High, low. Where was it? Where is it? What direction? Up, down, sideways, down. We're sitting at 965. Well, 965. Here's something. This is a little tidbit of information for those you may not know. Now, remember, you have the opening of the day, the high of the day, the low of the day, and the close of the day. Those are the four numbers of the stock. The volume is something a little bit different. 73 million. That's a lot of shares to be trading in one day. However, the last price, 965. See it? Tomorrow, the bid, 966 to 967. Both the bid and the ask are higher than the last traded price of 965. Now that's a little tiny bit of a clue that the market maker throws in there just to let you know he's going to push it up tomorrow morning. Well, that's a great idea. Well, let's see what a trade looks like on Ford. All right. 967, the 950s are going for 28. I lose 17 cents. So you take 17 cents off of this, and you're looking at 11? You're looking at 11 cents, which is over 1%, so I'd most likely do the 950s. Because I like it when a trade is in the money and it doesn't have to do a damn thing. It doesn't have to go up. It can stay exactly where it, because stocks only move three different directions. Up, down, and flat. Okay? So if she goes flat, I make money. If she goes up, I make money. Now, let's do a quick trade on you before we do that, let's take a better look at the chart. Year ago, 1162. The high of the year, 1485. The low of the year, back in August, 948. Look at the last 4 months. Down, up, down, up, down, up, down, up, down. That don't look good right there. Let's zoom into that and take a better look. Okay, so let's zoom in. Last 30 days, right there. Okay, here's the last 30 days. Now, the nice thing about the last 30 days, take a close look. Here's the high, gaps down, finds a bottom, goes back up, back down. Here's your 30-day bottom right here. All right, she went back up, pulled down. Now she's going back up again. Okay. So yeah, it's a good time to jump into Ford if you like Ford and it makes sense. All right. So let's do one on Ford. Okay, change this to covered stock. The 950s, there it is. One contract. At the market, so it fills first thing in the morning. And here's what it sounds like. Buy one covered call Ford F 100. Okay, that's the weekly. 17 January 25. Well, that's this coming Friday. The $9.50 call against the Ford stock at the market to open. Well, 936 is my break even. Well, the current price is $9.67. Well, I like that idea because I'm making money whether it moves or not. If it stays exactly where it is or goes up, it only moves three directions. And you remember what Meatloaf used to say, 2 out of 3 ain't bad. But, if she comes down a little bit, I make money. If she goes up, I make money. If she stays the same, I make money. This is exactly what I'm looking for. You guys got to figure out what you're looking for. I'm just showing you what I do. You ask me questions, I put them in here, and I give you my opinion. Oh, my opinion. My opinion. It's not a recommendation, it's just my opinion. Okay? I like Ford. Okay? My profit, $13.50 off a $930.37. Let's put up the calculator. Okay, clear. Profit right there, $13.50. 13.5. divided by 937. Now, this is an all-cash deal, not a margin. 1.4%. Now, remember, I'm looking for just 1%. That's it. Now, Ford, it's currently at $967. The book value for Ford is $14. Well, imagine that. The book value is higher than the stock price. Macy's and Kohl's. Do I buy more? Macy's closed 90. Yeah, well, Macy's. Hold that thought. I actually have some Macy's. Macy's was my favorite stock last year. What stocks do you have a high hopes for in 2025? Okay, dude, you're asking the total wrong question. Hold on a second. I gotta go find this guy's name because he asked me an interesting question. Alden Silva. Okay. Alden, here's the thing. You're asking me what stocks do I think are going to do good for 2025. That's a whole year. Okay, we're on week number 3. There's 52 weeks in a year, and we are week 3. All right? Week 3 starts tomorrow morning. Now, the way I look at it, I look for stocks that are consistently profitable. So, I'm trying to be 100% honest here. I honestly don't know what the Dividend Kings List 2025 looks like. I don't know yet. Okay, what does the Dividend Aristocrats List 2025 look like? Don't know that either. Now, I update my lists every year in January when the lists become available. Well, the list I'm looking at, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, and then there's a few other stragglers I throw in there because they're other traders that I actually admire and I like what they do. That being said, until the lists are updated, I honestly couldn't tell you. But here's the thing. If a company that was on the list, the Dividend Kings list for 2024, and they've done 5 decades of consistent profits, well, it's probably a good bet that they're going to do another one, usually. Because you don't make it to that list, especially when you get companies like Home Depot, Lowe's, Coca-Cola, Pepsi, companies that have been around for over 100 years. You don't get to that point and not being able to get your shit together, so to speak. So yeah, they're consistently profitable. So yeah, they are on my list. All right. So I can't pinpoint exactly what you're looking for, but I like the Dividend Kings, the Dividend Aristocrats, Dividend Champions, Dividend Contenders, blah blah blah, all that kind of nice, neat, fun stuff. All right. So that's Ford. I like Ford. Let's keep on moving. Let's get out of that. Let's get out of this. Let's go there, and let's go back to here. And let's look at a few more. Brian wants to take a look at Whirlpool. WHR. Whirlpool is going to be a no. Now, Brian, this is the reason why Whirlpool is going to be a no. Monthly options. Now, I don't like monthly options because I can only trade them once a month. Well, once a month, that doesn't work for me. Do you typically submit your transactions after hours during trading hours? No. Mike, I have a morning trading group. We jump on first thing Monday morning at 9 a.m. We go through all the companies that have dividends coming up because that's what I'm looking for. Because just before the dividend, the stock increases. When it does, I make a nice, safe, simple trade, get my 1% and be done and over with. So I used to. Before I was retired, I used to do all my trades the day before and then just set it and forget it because they have what's called a trigger trade. It allows me to get in and out with the profit within one day. All right. EPD. Wait a minute. Isn't EPD Enterprise? Okay. So let's look at EPD and the Yahoo Finance because I'm looking for consistent dividends. And EPD, I don't think has dividends. EPD. Okay, if it doesn't have dividends, why are we looking at it? Give it a minute till it loads. Come on. All right, so they do have dividends. Okay, 6.65. All right, historical data. Well, let's see how often EPD has increased their dividends. Well, because to me, that's what's important. Okay, here we go. Nice. Look at that, EPD. All the way back to 1998. Okay, 1998 was 11 cents. 99, 11 cents. Okay, so 11, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. Wow, they're doing it really slow. 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 44, 45, 47, 48, 50, 51, 52, 53. Whoa, what am I missing here? Well, they've had some nice dividend increases. That's what I'm looking for. Do you see that? KG? Okay. Consistent increases in dividends. 1998. Okay. It just keeps on going up. Higher and higher and higher and higher and higher. I like that. So, let's take a look at EPD. All right. Well, here's our high. Here's our low. Here's where it was a year ago. Here's where it is now. A nice steady up climb. Here's a spike, drops back, and then shooting back up again. Well, that looks lovely. Okay, let's take a look. Adam, how are you doing? Adam Owens, what's happening? Whoops. Whoops, come on. Here we go. All right, 32.20. So the 32s are going for 38. You take the 20 cents off there, you're walking away with 18 to 24. Yeah, no. Sorry, dude. EPD, the numbers just don't work. Now, the chart's okay, but the numbers don't work. Why would I want to invest in a company knowing beforehand I'm not going to make my target? Now, my target's not that difficult. It's just 1%. Okay, now we looked last week. There's 9,813 different companies we can join any day. That's a lot. But this one, it's not cutting the mustard. Sorry. Mr. Darrell. Uh-oh. I missed all those questions. Damn it. Anytime I let go of that, it just goes wrong direction. Matt, don't. Rolls going, don't. CVS. Jeff, we'll take a look at CVS in a second. Hi there, guys. I'm bullish midstream. New Treasury security wants to increase U.S. domestic production by 3 million barrels and drop price to 40 to 50. Okay, I'm not quite sure. That was not a question. Hand in hand with Trump drill, baby drill. Yeah. I get that part. But that's not a question. Anyway. Jeff wants to take a look at CVS. Now, I do have some CVS. Okay. Ooh. Quick look at that chart. Looks good. Comment on EPD. The numbers don't work on EPD. For me. If you like it, more power to you. The numbers don't work for me. Yeah, Adam. Or Alden. Yeah, I just looked at EDP. What the heck is EDP? EDP. All right, we'll take a look at that in a bit. All right, let's keep on going. CVS. I love the chart. Take a look at it. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Sideways, down, up. Okay, well, that's simple. Let's go take a look at the numbers. Well, currently, it's at 48.49. Well, the 48.50 is going to be the closest. And it's going for 50 cents to 132. Well, that's well over 1%. Well, let's do that one. Okay, a year ago, 77.57. We topped out at 80.58, and that was the end of March. Big drop went sideways. Look at this. This one was sideways. Okay, went sideways. A little bit of a spike, but then pulls back to this area right here. Between 54 and 60. Just goes sideways for what? 1, 2, 3, 4, 5, 6. 6.5 months before she drops. Now she's bouncing right here. Well, that's what I want to take a look at. Last 90 days. Okay, your last 90 days, last 3 months. Here's the high, here's the low, here's where it was. Look at this movement. Nice. It's bouncing up right here. You can't disguise that for anything else. That is moving to the upside. Well, great. Well, let's look at to the last 30 days. Sorry. All right. The last 30 days, which would be the 12th, right there. Okay. Classic. This looks lovely to me. To me, it looks lovely. Check it out. 30 days ago, 30-day high, right over 52. Drops down. Look at this area here in the 43 area. That's some pretty damn good support. Now it's going to the upside. Look at the room from here all the way up to there. You have all this space up here to go. Is it going to? Don't know, but that's what it usually does. You get your bottom here, 43. Now she's at 48. Okay? Okay, Hark. Uber has not been around for 20 years, dude. Sorry. Could you use a Roth IRA for dividend stocks? Yes, you can. Guitar Guru. Howdy, what is the minimum dollar amount one would need to invest? $1. It's the minimum. Robin, everybody starts out with a different amount. Okay, there's a couple of hundred people here, 7 different channels. If you want to start out with $100, great. You want to start out with 100,000, that's great. You want to start with 500,000, more power to you. Everybody has a different amount to start out with. We're all different. All right. Drag the puzzle piece. Well, put the damn puzzle piece up and I'll drag it. Got to prove that I'm a real person. Okay, that's CVS. Yeah, so I like CVS. So I'm going to write that one down for tomorrow. Unable to verify. Well, let's get this thing working. Boulder, how are you today? So while TikTok is redoing, let's go see if we can get it done the first time. All right. Really? It didn't like that one? All right, anyway. All right, so that's CVS. Right now it's at 48.45. The 48.50 is going for over 1%. That's what I'm looking for. So while this thing is resetting, Mike, CVS shrinking FCF. Okay. I know you primarily focus on stocks with EX date about 2 weeks out, but is that all you will trade, or sometimes other dividend stocks with EX date further out if the numbers look right? Absolutely, Mike. Right, Mike. Some strange reason this thing isn't working quite right. No, it's working. Alrighty. Next on the list, Coca-Cola. Okay, interesting. Thoughts on contributing money on leveraged stocks and contributing more than 2 to 3x drawdown stocks. Okay, Reese, you got to explain that to me in a little bit different. Okay, because you're talking about contributing money on leveraged stock and contributing more than 2 to 3x drawdown stock. I have no idea what you mean specifically. Okay, you need to ask a specific question there. Okay, covered calls and puts. Yep, I'm trying to go through these questions here. Hello, how are you? Can't wait to learn. Cool beans, Nasty Nate. Interesting name. Is the gain ordinary income? It all depends on how you have your account set up. I just let Robinhood do the dividend profits for me. Okay, like Robinhood has your best interest in mind. Holo. Robinhood app allows me to dividend returns without the headache. Okay, wonderful. I just came here. What is the name of the strategy you're using? It's called Dividend Capturing 2.0. I only use a minimum time frame, 100 inputs, data. It's enough. All right, Hugo. Not what I'm doing, but okay. We like you steel because of Traer. Okay. EPD. We already looked at EPD. Can you use Thinkorswim with Fidelity? No, you cannot. It is owned by Charles Schwab. Do you get dividends on long option calls? No. You have to own the stock in order to collect a dividend. Do you have YouTube series? Yes, I do. B-Rad Daddy! Riot. Now, we already looked at Riot earlier. CLF, we've already looked at CLF before, and it was a no before. It means it's not going to be again. Luke, dividends are forced withdrawals with a short-term cap gain tax. All right, Luke, fine. You don't like it. Nothing wrong with that at all. There's different strokes for different folks. There's an ass for every saddle. However you want to look at it. Okay? Dividends, however, are not forced withdrawals. Dividends are a portion of the corporate's profits they pass along to the investors. Now, if you want to do a little bit of history, the very first dividend stock was sold specifically with the intention to share the profits with the investors. Because in the late 1590s, a bunch of Dutch businessmen got together and they wanted to create the biggest company the world has ever seen, the Dutch East India Shipping Company. However, they didn't have enough money, so they literally went door to door. Hello, have I got a deal for you? Invest in our company. We will share your profits. As a matter of fact, the Dutch East India Shipping Company paid an average of 18% per year for 198 years before they went belly up. Corruption and mismanagement. You give people money and power, they fuck things up. That's what happened. Dividends are a portion of the profits the company gives back to the investors. Okay? You have two companies. Two types of companies. One will take all the profits, put it back into the company for capital growth. If you're looking for capital growth, if you're looking to buy a stock and have it shoot up to the moon, you are in the wrong place. That is not what I do here. I am looking for specifically weekly cash flow. That's it, weekly cash flow. If I cannot make weekly cash flow from a stock that I'm looking at, I don't want to look at it. Don't want to be bothered. If the numbers don't work, forget it. There's 9,813 companies to look at. Why would I bother with something that doesn't fit? All right. AMD, Advanced Micro Devices. Now, I'm pretty sure. Okay, let's go over to Yahoo Finance. We'll put in AMD, okay, Advanced Micro Devices, AMD. And let's see how wonderful AMD does with their dividends. Oh, imagine that. There are no dividends in the time period selected. So, WW, why are you asking me? Okay, because I'm pretty sure the name of this channel, or the name of the show, whatever you want to call it, Dividend Stock Talk. The very first word should give you a clue. Dividends. If AMD does not have dividends, why am I looking at it? Can you explain pros and cons of rolling over? Oh, well, yeah. Are you saying a margin account is more profitable? Laurie, okay, Laurie, understand this, okay? If you have to ask that question, you are not ready for a margin account, okay? Plain and simple. Yes, margin accounts are more profitable. However, they carry a lot more risk. So you have risk, you have reward. All right? All cash, basically minimal risk because it's your own money. But a margin account, you're borrowing someone else's money. So I always tell people, Laurie, just getting started out, paper trade for a while. Use all cash when you start out. When you get good, okay, now I've been doing this for 20 years, okay, I don't expect you to get it done within the first couple of days, first couple of weeks. No, it takes a little bit of time to get the hang of it, to understand it, because it's a total different way of thinking. Because we were all brought up, annual this, annual that, annual yield, annual percentage rate. No. This is weekly. Okay, what I'm doing this week is different than what I did last week, which is different than I did the week before. Because each company goes in swings. Okay, they don't all go up at the same time, and they all don't go down at the same time. Okay, Coca-Cola, well, the main corporate office, I believe, is in Atlanta. Okay, so, but they have Coca-Cola offices all over the world. All right, let's keep on going. Oh, Martha, the pros and cons of rolling over. That's a tough one because each one is different. So when I roll over, it's usually because I am either susceptible of losing money or it's a safer trade just to move it out and just keep on going. I don't understand why people keep putting up cryptocurrency. I don't do crypto. I don't know why they keep throwing it up there. Hopefully that answers the question. Okay, rolling over, I'm going to have to do a video on that, the pros and cons of rolling in option order, because it allows you just to take order for this week, move it into next week, and still collect another premium. So if I do an option order this week, okay, and I collect, let's say I collect 1%, and then on Friday I have the opportunity to let it expire, to let it be called away, or I can roll it forward and pick up another 1%. As long as I'm picking up a 1%, well, I have no problem rolling it forward and holding on to the stock. It's always a question about the numbers at the end of the day. Okay, because usually I can't answer the question of is rolling a good idea or not until 3 o'clock Friday afternoon comes around. Sometimes it's a great opportunity. Sometimes it's not. It always comes down to the numbers. What did I buy it for? What option did I sell? Where is it now? What's the value of the option now? What are my choices? Because Friday afternoon, see, I jump in on Monday, okay? Because Monday to Friday, that's the most amount of time you're going to get for a weekly option. And I trade weekly options only because I'm looking for weekly cash flow. I can't get weekly cash flow on anything else unless I want to sit in front of my computer. Now, I probably could do it, okay? Because I've been doing it long enough. I probably could make a lot more money sitting in front of my computer all day. But that's not my goal in life, okay? I'm 60. I'm retired. I don't want a new job of sitting in front of the computer. No, thank you. So I just take my 1% on Monday, and then Tuesday, Wednesday, Thursday, I just take a quick glance. What is it doing? Where is it going? And then on Friday, well, Friday's all the big questions. What did I buy it for? Did it do what I thought it was going to do? Where am I now? What are my choices? Because my number one priority is consistent profitability for me and the companies I invest in. Okay? And then number two, safety. I don't want to lose. That's pretty self-evident. I will roll forward as much as I can to avoid losing. Okay, so it always, ooh, what is that? That's weird. All right, anyway. Thanks. I don't know who sent that, but cool. All right, so let's keep on looking for more questions. Karen, thank you. Oh, before I forget, okay, because at Dividend Stock Talk, Karen, okay, there are people out there pretending to be me. You may get a DM, you may get an email, you may get a video and say, hey, this is James, I'm here to help you. No. I do not do any of that. Okay, Boulders 62. Now, before I ever allow anyone to be on live, I have to have a conversation with you first. Okay, hope you don't mind if you want to have a conversation with me. So I'm telling all of you, beware of scammers pretending to be me. I don't do any of that stuff. When I ask someone if they want to talk to me, send me a phone number, I will give you a call. The funny thing is, on average, there's 8 to 20,000 people that come through all these 6 channels. But only 1 or 2 on average will leave their number for me to call on a daily basis. So every day I call about 2 people. That's it. You have the opportunity to drop me a phone number and I will call you back. And then we can chat. I'm not going to try to sell you anything because this is not right for everybody. Okay, I don't try to sell anything to anyone. My number one request is that you walk away with one question answered. Does it make sense? Okay, now let me share a brief story. This whole trading thing came about when my 9-year-old daughter back in 2008 jumped up on my lap and said, Daddy, can you teach me what you're doing? Okay. So I said, sure. Can you teach me? I said, all right, fine. So here's the thing. Here's the challenge. I want to record this. This ought to be fun. How do you teach a 9-year-old to invest in the stock market? That's a valid question, because I know we all have 9-year-old sisters, aunts, well, you aren't, but you know what I mean. Sisters, nieces, daughters, whatever. Okay? Audio not clear. Terribly sorry. I'll see what I can do about that one. All right? How do you teach a 9-year-old how to trade? Well, first of all, you got to come up with a trading strategy specifically designed for a 9-year-old. It has to be simple. It has to be safe. It has to be predictable, consistent, and no way for her to lose. Because if she loses, she's going to cry, I'm going to feel like shit. Mama's going to get involved, I'm going to be sleeping on the couch. The couch really ain't that bad. But you know what I mean. It had to be simple, safe, predictable, consistent, no way for her to lose. Okay, so 5 rules. Okay, I had 5 rules for my 9-year-old daughter. Rule number 1, if it's not on your list, do not trade it. Now, my list, I told you already, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, and there's a few other odds and ends. Companies that are consistently profitable. That's what I'm looking for. If you don't understand it, don't buy it. If it's not on your list, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the game. We're playing a game here. Don't kid yourself that you're not. You're taking your money. You got 2 choices. You do it yourself, or you give it to someone else to do it for you. And I can almost guarantee if you give your money to someone else, they do not have your best interest in mind. They don't. Okay, I can tell you lots of stories. Well, this such and such person gave it to a money manager. Money manager was giving them 3% a year. They were happy. And I said, 3% a year? I can show you how you get 3% a month. And they said, no way. I said, yes. Anyway. Rule number 3. Make sure the company's consistently profitable. It boggles my mind when people invest in companies that are not profitable. Now, I understand everybody wants to shoot for the fences, get that Grand Slam home run, something that shoots to the moon. I understand that. That's pure gambling, pure speculation. If that's what you want, you're in the wrong place. I don't do any of that. Okay? Make sure the company's consistently profitable. 4, weekly options only. If it doesn't have weekly options, I don't want to look at it. I want weekly cash flow, and there's only 2 ways to get weekly cash flow. Weekly options or sitting in front of the computer all day, day trading. Yeah, that doesn't work for me. Rule number 5, make sure all the numbers work. Now, I showed you what I mean by the numbers. Okay, number 1, what am I buying it for? Number 2, what strike price am I selling it? What premium am I collecting? 3. 4, is it 1% or more? Great. If all that works, wonderful. Now let's go over the chart, because the chart is going to tell me which direction is it flowing. It's like a river. You've heard, if you haven't heard it, let me tell you, never fight the trend. If the trend is going down, do not start buying. It doesn't make sense. Okay? Never fight the trend. Okay? Make sure the charts are telling you it's the right time to buy. Okay? You can't mess it up. You really can't. Honestly, I don't know why people make it more complicated than it needs to be. I can get my 4-year-old grandson say, hey, little buddy, where's the high? It's right there, Papa. Where's the low? It's right there, Papa. What direction is it going? Take your little finger and go like this. Sideways, down, up, sideways, up, down, down. It's not that difficult. Adults have a tendency to make this more complicated than it needs to be. All right, Stephen, is 3 o'clock Friday necessary to roll, or can you make the decision on the weekend for a Monday morning trade? No, you cannot. Okay? Now, you can roll any day during the week, any day at all. What am I doing? Pink Girl, how are you? I am teaching people how to invest in dividend stocks for weekly cash flow, looking for a safe, predictable, consistent 1% per week. That's over 50% per year. Anyway, sorry, people over there joining in. I forget where I was. Anyway, let's keep on moving. So, if the company's consistently profitable, great. If they have weekly options, double great. Am I making 1% every single week? Even better. That's what I'm looking for. Simple, safe, predictable, consistent 1% per week. Stop making it more complicated than it needs to be. I think that's good for that video. And we'll save that one. And we'll save it there. Alrighty then. All right. Okay, so what else do we have here? Luke Wolf, why are you watching? Dividend stock are a horrible investment. Luke, I love it. People like you. I really do. Do you know why? I love it when people say negative stuff, because they say if you don't have enough haters, you're just not working hard enough. So I'm glad I got me another hater. Thank you, Luke. That's absolutely wonderful. I'm not going to sit here and argue with you. I'm not going to try to convince you otherwise. You know, you have your opinion. More power to you. Okay, Simone, how are you today? Texas Brown-Eyed Girl, how are you? I can see you better here, and it's faster instead of Instagram. Okay. All right, Glenn, Southeast Florida. What stock are we on right now? Oh, now, Glenn, I'm terribly sorry, dude. I have no idea when you posted that question, but the stock we're looking at right now is Coca-Cola. Okay, Coca-Cola's been around for over 140 years. I really don't think they're going anywhere. But let's take a look at the numbers and see if it's a good opportunity this week. All right, first thing, 5 things, always, always, always. High, low, was, is, and direction. Well, that's easy. Okay, now let's look at the numbers. Am I making 1% if I buy this tomorrow morning? Tomorrow morning, 60.87. I'll be looking at the 61s. Ooh, check it out. Coca-Cola, the 61, is going for 72 cents. 72 cents is more than 1% of 61. Well, let's take a look. A year ago, Coca-Cola was at 60.17. Bottoms out in the middle of April at 57.97. Look at the top. She tops out in the beginning of September at 73.50. All right. She goes sideways for a bit, drops. And here is the last 30 days on the 12th, right there. Now, I don't know about you, but I got a couple of things going here. You ready? Coca-Cola, Dividend King. That means they've increased their dividends to the shareholders for more than 5 decades. Well, that's a definite yes right there. They've been in business for over 140 years. I'm pretty sure they're going to be making Coca-Cola next year and the year after. I'm not too worried about them disappearing. They're the number 1 drink on the planet. Not just New England, not just Florida, not just United States, not just the Americas, but the whole planet. The number 1 soft drink on the planet is Coca-Cola. Argue all you want, is what it is. Okay, so 30 days ago we're at 64. Last week we're at 60.60. $60.60. Okay, we had 2 days to the upside. Okay, so Thursday was up, Friday was a little bit down, lower high, lower low. Not 100% sure what's going on here, but Coca-Cola, 30-day high, 30-day bottom. You're going to make most of your money buying low, selling high. So the question would not be, do I like Coca-Cola or do I not like a Coca-Cola? Well, the question would be is, Why isn't Coca-Cola on your list? I mean, think about it. 140 years they've been in business. I'm pretty sure they have a good idea what they're doing. But I could be wrong. Luke, yes. Safely doubling Warren Buffett's average performance. Okay, well, Luke, I beat Warren Buffett's performance every single year. For the past 15 years, anyway. Oh my goodness, really. What delta are you typically choosing when you write calls? Now, see, that's an interesting question. But what you're missing, okay, and this is a perfect example why adults have a tendency to make it more complicated than it needs to be. Say, Armin, you ready? Armin, if I am buying Coca-Cola tomorrow morning at $60.87, my one and only question should be to myself is, do I like Coca-Cola? Am I willing to hold on to Coca-Cola for however long it takes for it to hit my target of 61 and simultaneously writing a covered call every single week? So here's something. Okay, here's something. Coca-Cola's been in business for over 140 years. Okay, you can't argue that. They've consistently increased their dividends to their shareholders. It means they're consistently profitable. You can't argue that either. But you can argue whether or not you think it's going up or going down. I really honestly don't care what you think. Okay? That's you personally, not everyone. But you can't argue the facts. Fact, 30 days ago it was at right around 64. Okay, Friday, here was the close. High, low, what usually happens? Usually, not guaranteed. Usually, when you hit a bottom after a 30-day top. Now, a bottom usually consists of 1 day and then 2 or 3 days to the upside. Usually. Well, we have 2 days to the upside, Thursday and Friday, and we have a 30-day bottom on Tuesday. Okay? You can't argue you can argue all you want, but you're just not going to be right. See, here's the bottom here. You can't argue that. Okay? Could it go lower tomorrow? Yes, it could. But at this moment in time, here's the bottom. Is it going up? Maybe it will, maybe it won't. The question you need to ask yourself, do I like Coca-Cola? Do I like it at this price? Does this make sense? Now, I can do a covered call on Coca-Cola every single week. If the numbers are good, why not? Why not? All right. Can we look at CI? Hey, hold on a second. Oh, yeah. So, Armin, when I say adults have a tendency to make this more complicated, let me read the question to you guys. What delta? Hold on a second over there. The question is, at the moment, what delta are you typically choosing when you write calls? So let me explain this to you in a manner that you might understand. When you're trying to teach a 9-year-old how to trade, the number one objection or the number one goal, simplicity. If I try to explain to her the delta, she's going to say, what's the delta? Well, that's one of the Greeks. Well, what are the other Greeks? Well, there's the vega, there's the rho, there's the theta. Okay? And she says, what are those for? Well, that's part of the pricing method. So what is that? Well, the Black-Scholes pricing methodology for standardized options. Right over her head. Okay? Most adults don't understand that. What would make you think that I would try to teach a 9-year-old anything about the deltas, anything about stock options? I teach regular math. Regular math. The current price, 60.87. Okay, that's an easy one for a 9-year-old to understand. What's the number one? What's the price right now? Oh, it's 60.87. What's the closest strike price? Well, again, a simple question. The closest strike price could be 61. Well, what is it selling for? Well, again, another simple question. It's selling for 72. Is that more or less than 1%? Well, it's more than 1%. So, yes, yes, yes. And then we come over to the chart. 30-day high, 30-day bottom. Now it usually goes up. Yes, 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 everything's looking right. There's only one thing I haven't done so far, and that's going to the seasonality chart. Well, let's do that. Let's go to the seasonality chart. Now, if you're not familiar with a seasonality chart, let me briefly explain it to you. All the way to the left is January 1st. All the way to the right is December 31st. The blue line over here in the top left-hand corner, well, that's the stock price for this year. We're only in week 3, but week 1 was only 2 days. And week 2 was only 4 days. So that's only 6 days. 6 days. Well, there's 266 left to go. Okay? The red line represents the actual movement of the stock based on 10 years worth of information. So that's 2015, 2016, 2017, 2018, so on and so forth. This is the average move. So what does Coca-Cola usually do for the month of January? Well, that's for the first line. That's all. So let's zoom into that and take a look. Now, here's where we are currently, right there. And here's what it normally does. Well, for the next week or so, she'd be going sideways. It's going to dip a little bit, go sideways again, and then right towards the end of the month, she's going to go up. Normally, that's not guaranteed. Nothing is ever guaranteed except for 3 things. Death, taxes, and disappointment. Okay? All right. Wolf Shorts video. Hello, very interesting. So what do you recommend? Let's say invest 85% of all your savings in Coca-Cola. What you have to do, cash out every month. How is the process? No, I definitely would not suggest that. Number one, I don't make suggestions or recommendations at all. I take a look at numbers, I take a look at stocks, and give you my interpretation. Okay? I never say invest all your money into anything. All right, so let's get out of here. And let's go back and take a look at another one. Next on the list. All right, what system do you use for viewing this information? Answers for you. Good question. This here is Think or Swim. It's a trading platform offered through Charles Schwab. Okay, now it was owned by, it used to be a standalone investment portfolio back 20 years ago, but it got bought out by TD Ameritrade. Now, I traded with TD Ameritrade with this for years. Then they just got bought out by Charles Schwab. So Charles Schwab is still allowing us to use this. I really don't like Charles Schwab's trading platform. I like this one. I've been using this one for 20 years. Okay, it belonged to Tom. Then Tom sold it to TD. TD sold it to Chucky. So Chucky owns it now. All right, let's keep on keeping on. Can we look at CI? I have no idea who CI is. Now, I have no problem looking at stuff. CI is Cigna Group. Okay, I've heard of Cigna. Let's take a gander at Cigna. Low battery. What the hell's happening there? You people over in YouTube got a low battery. Okay, we only got 45 minutes left. Okay, so Cigna. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, and up again. So here's where we are now. I want to take a closer look at that. It looks kind of interesting, but I can get it at 283.26. So the 280, 250s are going for 170 to 4. So you might get you 1% out of it if you like the Cigna Group. So let's take a little closer look. Invest Stalker. Do you ever consider the EX dividend date price move down of the dividend? Yeah, you're absolutely 100% correct. Hold on, let's take a break for a minute from that, and we'll go over to this just to point out this little thingy for this gentleman here. Okay, what you're looking at here is an EX dividend calendar. Okay, EX dividend calendar. It tells you when a stock is going to have its EX date. There's 4 dates to remember when you're investing in dividend stocks. Date number 1 is the announcement date. Hey, my name's James. I'm a representative of IBM. This is how much we made this year. This is how much we're going to pay, and you're going to collect it here. That's the announcement date. Date number 1. Date number 2, little green dot here. the EX dividend date. That is the last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you've got to buy it before the little green dot. That's why I use the calendar. It tells me when to buy it. Okay? Now, what InvestStalker is talking about is exactly why I invest in dividend stocks. Because he's talking about the stock price going down after the EX date. And he's right. Stock prices go down after the EX date. But what he's forgetting, what he's not mentioning, is the stock goes up in price before this date. So if I'm looking at Lowe's, okay, Lowe's is right here on the 22nd. No, never mind. Look at Clorox. Here's Clorox on the 29th. Okay, January 2025. Clorox is down here on the 29th. That's when they're paying their dividend. If I want to collect the dividend, which is $1.22 over here, I got to buy it on the 28th, the 27th, the 14th, the 1st, the 9th, the 7th, the 17th, anytime before that date. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. Self-explanatory, that's when you get your money. So let's get back to this for a second. If I want to collect the dividend on Clorox, 122, I got to buy the stock before the 29th. Okay? Now, why would I buy the stock to collect the dividend, knowing that the stock is going to go down after the EX date? Usually. Not always, but usually goes down after the EX date. The equal amount of the dividend. Usually. Why not buy the stock 2 weeks before the dividend on a Monday and do a covered call? Well, that would be the 13th. Well, guess what? That's tomorrow. So let's take a quick look at Clorox, because Clorox has a dividend on the 29th, which is 2 weeks from now. Okay? Take a look at it on a Monday. Then, now remember, the dividend is $1.22. So let's go trade CLX. Interesting. All right. Currently, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down, up, down. Doesn't look very promising right here. Okay. So the current price right now, the last price, was 157. So if we're looking at the 157.50s right here, we're collecting anywhere between 50 cents to 185. So you could get your 1% out of there. It's more than the dividend, because the dividend is only 110. But here it's going from 50 to 185. So you probably get your 150 out of that. But here's the thing. Okay? If I buy it tomorrow, the 13th, collect a 1 cent premium. Okay. 157.50. The 1 cent premium between 50 and 185. You might be able to over that price. Well, I made my 1% or more, right? Because that's what I'm looking for. The dividend's only 122. If I make the premium on 157, because that 157 is 1%, okay, $1.50. Okay. If I do that tomorrow, and the stock is above that price on the 17th, which is Friday, I make my 1%, I move on. Do I really want to jump into it again and try it again? Well, I could if I wanted to, because the dividend's coming here. And usually, just like he pointed out, okay, InvestStalker just like he pointed out, stocks have a tendency to go down after the dividend is paid. Well, he's right, it does. But also, stocks have a tendency to go up just before the dividend. So if I buy it 2 weeks before, collect my 1% here, which is more than the current dividend, right? If I hit my target, great, I move on to the next stock. If I don't hit my target, I will continually own the stock, bring it back to here, the 20th, which is next Monday, not tomorrow, but next Monday, and I'll do it again. So I'll collect 1% here. If I don't hit my target, I'll do it again here. Maybe collect another 1%. If I don't hit my target, I'll do it here again. Maybe get another 1% and get the dividend, and maybe I'll hit my target. And I'll do it every single week until it hits my target. Well, look where the chart is. What is the chart telling me? Well, the chart's telling me it's not a great idea to do that right now, Jim. Might not be good. Don't do it. Well, fine. I'm not going to do it because the chart is telling me not to. Okay, the last 30 days. 30 days ago was the 12th. Okay, here's your 30 days ago. Here's your 30-day high. She drops down. Your 30-day bottom was on the 6th, which was Monday. That was the bottom. Tuesday was higher. Wednesday was higher. But Friday was down. Okay, what's with that? I wouldn't jump into it until it has a nice steady move to go to the upside. But stocks have a tendency to go up just before the dividend date. Is it guaranteed? No, it's not guaranteed. It's just a tendency. Okay, so what does seasonality tell us for Clorox? Look at that. Isn't that gross? That's yuck. Best time to jump in? Look at this. Second week in January. Shoots up. Pulls back. Next time to buy it. Great time to buy it in March. And it shoots way up in May. This is one of the beautiful things about seasonality. Okay, because basically, look. 10 years in a row, shoots up, pulls back, shoots up, pulls back, shoots up, goes sideways. Well, let's take a look at January. Here's January right here. Okay, and here we are right there. Now, please tell me you can see this. Here's January right here, the blue line. Okay, this is the red line, 10 years worth of average movement. Is that guaranteed? No, it's not guaranteed. It's just what it normally does. It's like, why does Weight Watchers go up in the first weeks of January? Well, we all know that one. Okay, but look, she should shoot up in the next 2 weeks. The next 1 week. A little bit pull back, a little bit up, a little bit down. Okay, so you've got to decide, is that right for you? Okay, so Mr. Luke Wolf has some more to say. Intentionally devalues itself and takes away from their cash to force a short-term cap gains tax invite. Oh, you like to make things complicated, don't you, Luke? That's okay. What about Chubb? I like Chubb. However, if you didn't know, Chubb used to be a dividend king. Reduced its dividends and then they dropped. Because it retains its earnings to grow their company. Okay, Luke, I understand what you're saying. I really do. And everything you say so far tells me you're in the wrong place, dude. I'm not looking for capital growth, which is what you're talking about. And there's nothing wrong with that. I'm looking for cash flow. Dividend stocks that have specifically increased their profitability for more than 2 decades. It's not that difficult. Okay, it was created for a 9-year-old, and I don't know why. It boggles my mind. Where adults have a tendency to make it more complicated than it needs to be and ignores some of these simple instructions. Number 1, 20 years of increased dividends. Number 2, are they consistently profitable? Number 3, do they have weekly options? Anyway, Chubb. Let's take a quick look at Chubb. No, sorry. Chubb, okay, is a monthly optionable stock. I don't do monthly options. The numbers just don't work. Asim, how are you today? Twisted Philly, my U.S. Steel got called away. I made 9% in 2 weeks. Nice. How about peanut butter and raspberry? Is it a good dividend stock? Well, Luke, finally, Luke, one thing we can agree on. Don't trade PBR. PBR, peanut butter and raspberry. That's what I call it. Interesting chart. But here's the reason why I don't like peanut butter and raspberry. Okay? PBR. Now, PBR does have dividends, but that's not the reason why I don't like it. All right? It appears that Yahoo or YouTube, I take this one off. Hold on a second, you guys. Tim McCarty, how are you? Uh-oh. I'm trying to get the plug working properly. Okay. Hopefully that worked. All right. So let's take a look at the dividends on PBR. Okay. Now, this is one of the reasons why I don't like it. Are you ready? Here we go. It started off at 30 cents. Then it drops down to 2. Then it goes to 23 to 6. 6 to 11 to 25 to 19. So it goes up, then it goes down. It goes up, then it goes down. Then it goes down, then it goes up. Okay, 27 to 47 to 23. Down. 17, down. 27, 28. 18, down. 12, down. 80, 29, 34, 22. How can you honestly say that is a good investment? Jose, ¿qué pasa, amigo? ¿Cómo está? ¿Está bien, eh? No. Okay? Up, down, up, down. Look at the numbers. Okay? 27. 47. Well, that's nice. But it goes to 23, which is down. 17, down. 28, 29. 18, down. 12, down. 80. 29, down. 30. Yeah, it's up, down. That's like 3 steps forward, 2 steps back. No. All right. JCL. Geraldo. What is that? Alda Steel? Okay, you got to give me a ticker symbol. Hershey announced a dividend increase along with Flour Food and Shutterstock. Okay, now, Andrea, we'll take a look at Hershey's because I like Hershey's. But the other two, I'm not sure of. HSY. Sorry, kiddo. We're going to say no to Hershey's for this week. I mean, didn't even load everything. It was an automatic no. Look at this. Here's the high right here at 2.8. And it's down here to 158. It's dropping. But what was nice about this, Andrea, is if we keep our eye on this, see it find the bottom, turn around, go back up. So I'm going to write Hershey to keep our eye on this week if you like the numbers. Wait, before we even do that, 158 to 159, 160s, 120 to 200. Okay, so that will be close to 1%. So let's write Hershey's down. We'll keep our eye on it. All right. Next. Oh, I missed all these questions. All right. Simone, CI, we already looked at. Chubb, we already looked at. Okay. Made 9%. Do not trade. Hershey, no, it's going to steal. Luke, not a good dividend stock. Yeah, Jose, we already took a look at that one. Angela, we already looked at Chubb. How about PBR? We already looked at that one, Jose. You don't want dividends. All right, Chubb, Luke. It's forced short-term taxable withdrawal. All right, Luke. Oh, my God. I honestly can't believe... Luke, are you shitting me? You're actually telling this guy, Choi, SCHD? Hell no. See, Luke, I got a problem with you. I do. Walgreens for next week. Anthony, we'll take a look at that in a second. WBA. WBA. All right. Okay, Luke, I'm definitely having a problem with you now. Let's pull up SHCA. SCHD. Okay, number one, okay, SCHD is a monthly optionable stock, which means you can only do an option trade on it once a month. Once a month equals to 12 times a year. If you average 1 to 2% on each option trade that you do, doing a covered call. Now, the reason why I'm saying covered call is it a simple, safe, predictable strategy. Okay? There's only two simple strategies. The simplest is just to buy the stock. That's the simplest. But there's no predictability to it. There's no safety to it. A covered call, you're buying it at a certain price, you're selling the rights for someone else to buy it from you for the exact same price you just paid. It's so simple, it's silly. Pink girl, how you doing? So the thing is, if I buy SCHD at $27.04, because that's the current price, I sell someone the rights to buy it from me at 27. I'm collecting 20 cents. That's 1%. Michael, thank you. Yeah, rule number one, don't piss off the teacher. Yeah, some people should learn that one. But here's the thing. What is the next one? Because 5 days does not really constitute, a good idea because this is a monthly. So if I do the 27s, I'm picking up 50 cents. Okay, 50 cents on a $27 stock, well, that's a little bit less than 2%. But look how long I have to hold on to it. 40 days. That is 5 weeks. So I'm getting 2% for 5 weeks. Explain to me how 2% in 5 weeks, that's 1% a month. 1% a month is 12% a year. Why the hell would I want to get 1% a year when I can do a weekly optionable trade and make 1%? And I can do that 52 times a year. But wait, it gets worse. SCHD gets worse. Hold that thought. Let's keep on moving. I'm going to pull up Yahoo Finance and show you just how wonderful SCHD really is. SCHD. Now, for those you do not know and those that are new, okay, Jose, Luke, both of you, this behind me, the screen, is live on YouTube. So if you cannot see the numbers on your phone, your tablet, or whatever you're watching on, open up your big screen TV. You know that big 80-inch TV you got in the other room? Yeah, go there, pull it up on there. It's on YouTube. Okay, it's live on YouTube right now. So let's see how wonderful SCHD increases its dividends. Holy shit, 2012, that's 13 years. That's not even close to 20 years. Okay, not even close to 20 years. But wait a second. It gets worse. Okay, 5, 7, 9, 7, backwards, 8, 8, 8, 9, 10, 11, 14, 16, 15, 20, 18, backwards, 20, 23, 22, backwards, 25, 20, backwards, 25, 27. What is that? 2 steps forward, 1 step back? No. But wait, it gets worse. Believe it or not, SCHD gets worse than this crap. So let's go on over to the summary. What's the summary? The summary gives you all the information you need to buy anything. What's the high? What's the low? What's the 52-week high? What's the 52-week low? What is their idea of where they think it's going for the next year? But more importantly than that, what is the current yield? The current yield is you put in your money and this is how much you get back. 3.64%. How the hell can you tell this guy SCHD is a good investment? 3.6. The freaking federal government gives you more than 5%. But you're going to put into this piece of crap getting you 2.6 and they're not even profitable. They go up, they go down. They go up, they go down. Consistent profitability. Something about consistent profitability is not getting through to your head. Why would you invest in a company that's not consistently profitable? It boggles my mind. What the hell are you thinking? SCHD, in my humble opinion, just my humble opinion, it's a big piece of turd. But that's just me. because I want consistent profitability. Me personally, I honestly don't care. Now, I have some concern for some of you guys, especially you newbies. If you're new and you don't know what you're doing, keep looking. Keep asking questions. You will find something that makes sense. Once you find something that makes sense, stick with it. Keep doing it. See, I'm a Gen Xer. I grew up in the 60s, 70s, and 80s. If it ain't broke, don't fix it. If it's working, leave it alone. Okay, I've been getting 1% every single week for the past 15 years. Well, I shouldn't say that, because I don't get 1% every single week. Some weeks I make more. I think 2024, 1 week I lost money. He said 1 week I lost money 1 week. Okay? 4 weeks I didn't make 1%. But my accounts are over 50% for the end of the year, which is over 1% on average. All right, let's keep on going. Quiston Philly, nice. I got 2.5% for 1 week recently on X. Cool beans, David. Glad it's working for you. GGB. GGB. I've never heard of this. Now, just a tidbit of information. Okay, JCL. I never heard of the company, so more than likely it's going to be a no. More than likely. And it is. Larry, I joined your Discord. Wait a minute. Whoa. Larry, I just joined the Discord and emailed you. Where can I get your whole strategy and dividend timing on covered calls? Larry, I will send you a text. Okay? I sent out the list that we're going to be looking at this week as soon as I'm done here. Okay? I send you a link to the morning trading group. Okay? For the morning tomorrow, what time we're going to start, and give you the link for the Zoom call. And you'll get a list of the stocks that we'll be looking at tomorrow. Okay? Alrighty. Down. After your stocks get called away, do you just find the next stock? Exactly, Twisted Philly. Austin, what's happening? Andre G. General Mills really dropping. When it finds the bottom, will it be a great deal? Well, Andrea, let's take a look at it. Wait a minute, isn't General Mills a monthly? Andrea, come on, you've been here long enough. When does the AM group start? Well, it starts at 9 a.m. Eastern Standard Time. Now, I have no control over when the stock market opens. It opens at 9:30 a.m. Eastern Standard Time. So we jump on at 9 to be able to get an idea of where our positions are. Okay, Tim? See you in the morning. Got questions? Ask. All right. Don't. How about PBR? We already looked at that one, Jose. Walk me through a 12.14 covered call on Ford collecting the dividend. 12.14. Why would I want to do 12.14? That's a month away. What stocks pays dividend? Well, there's over 5,000 stocks that pay a dividend. I have CVS, but it's up like $5 from the bottom. Yes, Andrea, it's in a perfect spot. Okay? Andrea, we looked at CVS a little while ago. At the high, it dropped down, and now it's turning around, going back up. Perfect time to jump in. Mine, is this a good stock? Mine? What the heck is mine? M-I-N-E. Hell no. Joseph, what's the dollar amount if you want to make $150,000 per year? $300,000. That was quick. MNR. What the heck is MNR? Another no. How about PBR? We looked at that one. Thank you. PVR. Jose, what is PVR? PVR. Partner management. Jose, dude. Okay? Jose, are you listening closely? This is the third time, Jose, you've given me something that doesn't fit. Okay? When I always tell people, never buy something you don't understand. Now, so far, each stock you've asked me about is no, and a hell no. Okay, so if you don't know whether the company has profits or not, you shouldn't be investing in it. If you don't know whether the company has weekly options, you shouldn't be investing in it. James, your other YouTube channel is pointing to the ground. Oh yeah, it's gone. Let me get it. Hold that thought. Well, where the hell did it go? There it is. The camera jumped. Can I do this plan if I have to work all days Fridays? I can online. Get online. Uh-oh. You can do it the day before. All right, let's see if that works. Okay, let's go back to this. Yeah, that's working again. That's working again. Sorry about that. Okay, Viascob wants to look at IBM. Could I do this plan making trades on Thursday evening and Sunday evening? Yes, you can, Steve. As a matter of fact, Steve, I used to work 9 to 5. Used to. And I couldn't trade when the market was open. So I did all my trades before market hours and after market hours. Because Thinkorswim allows me what's called a set it and forget it trade. It's called a trigger trade, where I have a certain idea in mind. I do it and it in and out within a day. Almost like day trading, I don't happen to be there. All right. IBM. All right. IBM is a little bit of a downturn at the moment. Look at your 30-day high. Came down, back up, came down, back up. Now it's coming back down again. It's still in a downward trend. When you're looking at a company you're looking to buy, make sure you're buying it at the right time. See, here's your high, and it's coming down. Okay, it hit a bottom Friday. So we're looking for 2 days to the upside. So it's not going to be this week. Or it might be Wednesday or Thursday, but it won't be Monday or Tuesday, because I like 2 days to the upside. Because if it's higher tomorrow, that means it's only 1 day to the upside. I like 2 days to the upside before I jump into anything. Sweetie Swag, how are you today? Oh, okay, please tell everyone that you don't read comments on the live chart YouTube video. I try to tell them to come here and comment, but they won't listen. Oh. Well, here's the funny thing. I have 7 channels today, okay? There's 3 on YouTube. 1 on Facebook, 1 on Instagram, 2 on TikTok. And the funny thing is, I don't get to see all the comments. Okay, like Sweetie Swag said, the live channel, is just showing this and nothing else but this screen. Okay, yeah, I don't see those comments. But I did pick up some cool software last week. We're going to be having a couple of monitors going. So hopefully sometime during the week, I'll be able to see all the questions from all the streams. Okay, at this moment, I can only see 1 YouTube channel, 1 TikTok channel, and 1 Instagram channel, and 1 Facebook channel. All right, so that being said, let's keep on keeping on. Okay, so IBM, okay, not at the moment. It's in a downward trend, something you keep your eye on, see if it makes good. Please walk us through a covered call transaction. AC, we already did 2 of them tonight. Hold tight. I will do another one as soon as I find a good one. Okay. Using Coca-Cola or something, anything. Now, see, that bothers me. My phone's not charging. Now it's charging. All right. Rami wants to take a look at Dollar General. Now, I do have some Dollar General that I'm taking care of. Here's the high at 167. Here's the low down here at 69. Well, look at the last 3 months. The last 90 days, last 3 months. Here's your high. Here's your bottom right there. Wednesday. Wednesday is the bottom. Friday was higher. Now, I like 2 days to the upside before I jump into anything. Okay, here's your 30 days. 30-day top, 85. 30-day bottom, 70. That's a $15 drop. Okay? So Friday was one update. I like 2 updates, so I'm going to be watching Dollar General for the next couple of days to see when she turns around. I'm going to write Dollar General for tomorrow. But take a look at the numbers on Dollar General. Currently, it's at $71.55. So the 72s are going for $1.11. That's more than 1.5%. Now, if you need a little bit of help with your math, 1% is like 50%, 52% a year simple interest. Compounded is somewhere around 74. But 1.5% is like 75 to 85%. Christopher, you need help? Christopher, I'm going to let you know. DM me with your phone number. I will give you a call. We'll chat. See what you think. See if it makes sense. Unplug this one. Unplug that one. Plug this one in over here. Oh, come on. There we go. Now it's charging. All right. NSX Garage. Mr. Wow, can you make 1% on your $30,300 a week, $1,200 a month? Well, yeah, you could. I can confirm, Gen Xer, that he does call people. Yes, I did call him. Audio is perfect. Woohoo! All righty, NSX, exactly what I want to know. Well, Christopher, if you really want to know, DM me with your phone number, and I will give you a buzz. I don't know what the hell's wrong with my phones. They're just not charging. Oh, that one's charging up. Christopher, I want to make $3,200 a month off of 1% a week. Okay, that's $800. That's $80,000. Okay, $3,200 a week. Divide that by 4. That's 800. Okay, $3,200 a month. Divided by 4. That's 800 a week. Well, 800 a week, 1%. That's $80,000. So $80,000, 1% a week will be $800 a week, which would be $3,200 a month. Has perfect thoughts on Altria. Tizzy B wants to take a look at Altria. Okay, Altria. All right, Altria is in a downturn, kiddo. Okay, here's your high right here 30 days ago. It's still going down. We're keeping our eye on it. So once it hits that bottom, turn around, go back up. Oh, Couch is great. I have no idea, Christopher. Couch. Jonathan K. Kurt Hatton, MSTY. Okay, Kurt, I want you to understand one thing. No dividends, no thank you. Okay, if the company doesn't pay dividends, it's basically a waste of our time. Jaya, are we only going for weekly dividend payments, or do you schedule to see how to get weekly payments? Okay, Jaya, you weren't listening. Okay, there's no company that I know of that has weekly dividends. None that I know of. Okay, they either pay once a year, twice a year, 4 times a year, or once a month. Okay, what we're talking about here is weekly stock options. There are specific stocks that have weekly stock options. Yep, I teach option trades. Matt paid 156% in dividends and for less than a year. How could a monthly payout, wait a minute, payout be a bad play? Okay, Kurt, I'm not quite following what you're saying here, because basically it says Matt paid 156% in dividends and for less than a year. How could a monthly payout be a bad play? Not 100% sure if I understand that. Okay, Kurt, MSTY, I already told you, I don't think it has dividends, but if you're insisting, we'll take a gander at it. MSTY, Misty. Okay, so when I'm looking at Yahoo Finance, now you guys are all going to have to find a finance website. A financial website tells you the information. What are the options? What are the dividends? What is the yield? What is the PE ratios? What's the highs? What's the low? What is the current expense ratios? And what is their 1-year target? Well, I'm looking here at Misty. PE ratio doesn't have it. Yield doesn't have it. Well, that tells me it has no dividends. So no dividends, no thank you. Frank, what stocks do I recommend? I don't recommend anything. Okay, Frank, what I recommend is for people to do their own research, because nobody has more interest in your money than you. Now, I look at stocks that have more than 2 decades of increased dividends. A dividend is a portion of the profits. If the profits consistently increase, well, the dividends will consistently increase. So if they're consistently profitable, the dividends consistently increase. It's basic common sense. Okay? You should probably change it to uncommon sense because a lot of people don't have any. But if the company's consistently profitable, we're talking about dividend kings, dividend aristocrats, dividend champions, dividend contenders, and I like to throw in Warren Buffett's list for an even 5 lists. Are you still hosting a morning group? Big Drew, yes I am. I'm in my 40s. I can't understand that. Money in a box. You're in your 40s? Now, I don't want to insult you. Really, I honestly don't. But you're in your 40s and you can't understand what I'm showing. See, now I feel bad because I created this for my 9-year-old daughter. As a matter of fact, let's take a gander at the little princess. Okay, we went to my website. Okay, wait for it to load. Wow, having issues with the internet tonight. Okay, having a little bit of issues. Please tell me. Okay. Yeah, it's not loading. Damn it. All right. Needless to say, okay, monkey in a box. This trading strategy that I'm teaching was created for my 9-year-old daughter. 9 years old. It had to be simple, safe, predictable, consistent, no way for her to lose. 5 rules. Never buy something you don't understand. Never sell at a loss. Consistently profitable, weekly options, and then check the numbers. The numbers, simple. What am I buying it for? What am I selling it for? What am I collecting as a premium? Is it over 1%? Yes. What's the chart telling me? Is it the right time? Okay, if it's going up, if it's at a high, I don't want it. If it's at the low, I don't want it. I want it going up from a bottom. That's what I want. Can we look at GRO? GRO, never heard of it. Just to let you know, if I've never heard of it, it's most likely gonna be a no. No options, no thank you. When I say never buy something you don't understand, when I say never buy something you don't understand, if you're looking at GRO and you didn't know it has no options, well then you shouldn't be buying it. If you don't understand it, don't buy it. And apparently you don't. Because when I say no dividends, no thank you. No options, no thank you. And this has no options. So why are you suggesting it? That's my honest question. If you understand what you're buying, you should know whether or not it has options and whether or not it has dividends. If you don't know, don't buy it. Is public and OK brokerage? Never heard of it. Bama Redneck is in the house. Dude, took you long enough to get here. That is not a weekly optional stock. Do I need to invest thousands to get results? No, you don't, Jake. I'm asking because I'm pretty strapped for cash frequently. So, Jake, what's going to happen usually? Okay, now my assumption, by looking at your picture, you're a little on the young side. But at some point in time, you are going to retire. So whatever you're strapped for cash, okay, whatever you can afford to invest on a weekly basis and compound it on a weekly basis, that should do fine. But you got to start somewhere. You got to have consistency and predictability, which means you got to do it all the time. Whether it's $5, whether it's $10, whether it's $100, whether it's $1,000, find a number that you can work with and just diligently every week invest it into what you think is right. Sandy, CVS and MPW. Sandy, I actually have both of those. It's 11:25. I'm done in 5 minutes, so I'm going to go through all the questions. And if I have time, I'll take a look at something else. Monkey in a box. So as long as I get 1% gain on an investment, I can sell for a profit. That covers fees and taxes. All right, monkey in a box, you're asking that interesting question. When I say you need to talk to a tax strategist or a tax planner if you're having concerns about taxes. Okay? In the United States, federal income tax is voluntary compliant, which means you pay it because you want to and you volunteer to pay it. Okay? If you don't, well, cancel your subscription. There's a certain way to do it. I can't tell you. It's not my thing. Okay, Sunite 45 MSTY. No dividends, no thank you. Hershey is at a 32-week low. Yeah, I see that. We looked at it. The numbers just aren't right for Hershey. All right. Andrea, the other two are monthly, but I like it. Yeah, I know you do. Chuck, why don't I want dividends? Well, Chuck, the reason you don't want dividends is because the premiums are usually higher than the dividends. A premium you can collect every 7 days. Okay? Every 7 days. A dividend you can collect once every 90 days. Now, Chuck, I didn't go to college. I know that. I apologize. But I do know. Dividends, well, some companies pay once a year, some pay twice a year, some pay 4 times a year, and some pay 12 times a year. So let's say hypothetically you go with the companies that pay dividends once a month. That's 12 times a year. Okay, great. If I do covered calls on a weekly optional stock, I can collect a premium every 7 days. And the premiums are usually higher than the dividends. So if I'm consistently getting a premium every week, that's 52 times a year. That's over 50% a year. Now, 50% a year works very wonderful for me. Patrick Grace, dude, seriously, don't talk to me about SCHD. If you have no idea where you're putting your money and you want to put it into that piece of crap, be my guest. SCHD is paying 3.3% per year. 3.3% per year. The federal government is paying 5% per year. Why the hell are you putting your money in SCHD? And the dividends, up, down, up, down, up. A dividend is a portion of the profits. If the dividend is going up and then the dividend is going down, well, the profits are going up and then the profits are going down. Because a dividend being part of the profit that the company pays back to the company, if it's going down, that means the profits are going down. I don't understand why people don't understand that. It's simple. Put it this way, okay? Let's say you borrow money from Chuck, and Chuck says, great, every week I want 10% of your profits. Well, wonderful. Let's say hypothetically, week 1 you make $1,000. Good. Chuck gets 100. That's 10%. Now let's say week number 2 you make $900 and Chuck gets 90. Chuck is going to say, "Whoa, dude, what are you losing money?" No. If the company's not consistently profitable, why are you putting your money into it? It boggles my mind. AVGO, the numbers don't work. Sorry, Edward. And we got 1 minute. Let me see what else we got here. Angela, I want to get on your morning Zoom. How do I get the link? Okay, Angela, you know what? You might want to send me your phone number. I'll give you a buzz, walk you through it if you like. If you just want to go to the website and sign up, well, that's on Dividend Stock Talk, right here, the 10-minute trader. Okay, here's the 10-minute trader. You land on there. Sounds familiar, simple, safe, predictable, 1% a week. We live nightly training, 9 p.m. Eastern Standard Time. Well, that's what we're doing now. Right there. Trade live online. You click on that, and that will take you to the Patreon Dividend Stock Talk. All right? Let's go back to where we were right here. All right. Oh boy. User 933-932-605-9713. Why couldn't you name your parents name you Peter? Oh, I thought it was a weekly. Angela, I wanted to get in the morning club. Okay, that's where it was. How do I get access to the morning group? Okay, I just showed you both where it was. Okay, Dividend Stock Talk at Patreon. Okay, how do I get access? Explain aristocrat stocks. Oh boy. Okay, the Dividend Aristocrats are 54 companies that have increased their dividends to their shareholders for a minimum of 25 years. That means every year, higher and higher and higher and higher and higher and higher dividends. No up, down, none of that crap like SCHD. Yeah, no. Sorry, GIS is not ARG. Can you see the comments in this chat? Jaya, yes, I can. But as I told you in the beginning, okay, I got 7 channels going. I got 6 now because that one turned off. I get 6 channels going, which means I'm getting questions from everywhere. I do answer every single question, which is what we're doing now. Level Life. Do you have SPY in your portfolio? Hell no. Did you see the numbers on that thing? And if so, what is your DCA? Yeah, I don't do SPY. Now, when I say I don't do SPY, you really, 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 really need to go into the numbers. Okay? When I say really got to go into the numbers for SPY, well, let me tell you why. SPY. I'm just going to do the simple numbers. You ready? All right, here we go. Spiders SPY 500 ETF Trust. Okay. What's the yield? 1.21%. That's per year. That's not per week. That's not per month. That's not per quarter. That's 1.2% year. Gaining 1.2% for a year. You're actually losing money. And don't give me this crap that you're not, because the inflation is going through the roof. And don't give me, oh, no, it's not. Yes, it is. Okay, a couple of years ago, I went to Walmart, bought a soda, 50 cents, 2 quarters. Okay, Biden and a bunch of boneheads jumped into office. Now it's $1.75 for the same freaking soda. You cannot tell me that inflation's not more than 1.2%, because it is. You're losing money. Put it in this spot. Yeah. Procter & Gamble, please. Bottom of BB and RSI is low. The Skincare Diarist. Cool. You want to look at Procter & Gamble. Well, Procter & Gamble's been in business over 100 years, and they're going to be a no, kiddo. Sorry. Okay? Here's the top. Here's the bottom. It's still continuing down. And it's going to continue to go down until it's done. Isn't that weird? It's going to continue to go down until it's done. When it's done, it will make a bottom. It will turn around and go back up. Kind of like the same thing here. Kind of like the same thing here. Bottom, turned around, went back up. Okay? Sorry, PG is going to be a no. Johnson & Johnson this week. Same thing. New bottom Friday. Calvin Hill. What 3 brokerages do you like? I honestly couldn't tell you. Okay, I wrote a book 15 years ago, Choosing the Right Trading Platform. 15 years ago I wrote the book. I've been with the same trading platform for 20 years. Okay, because I looked at all of them 15 years ago, and nothing even came close to what these things offered in perks. William, we want at least 1% premium weekly, but we would be open to a higher premium, right? Well, yeah, of course. But William, the main objective, okay, number one objective, consistent profitability in the company in which I'm investing in. Consistent profitability. I mean, is it so hard to say, I don't like this company because they're not consistently profitable, but I like this company because they are consistently profitable? That's easy. Okay, but it's all, the right time too. What is the chart telling me? Well, here, Johnson & Johnson is a profitable company. They do increase their profits every single year. They have increased their dividends for over 5 decades. It's a great company, but not this week because it's falling. Never grab a falling knife. Never grab everything's falling. Wait for it to hit the bottom and turn around. Then jump in. I am new completely. Do you have a website to learn your method more in depth? Okay, Jake, your best bet is just show up every night. I'm here every single night. Okay, as you continue to listen, everything, it's kind of like a movie. When you go to a movie, you see all the action at first, and it's like all the little pieces finally come together. Then at the end, it's like, whoa, I didn't see that coming. Same thing. Here, you will learn one step at a time. You'll learn the new languages. Okay, what's a call? What's a put? What's the expiration date? What's a dividend? Stuff like that. Okay, Jake, do you cover U.S. stocks only? Unfortunately, yes, because I don't know very much about the European stocks, or every continent has their own stock market. It's weird. Okay, but the only one I'm informative of is this one. You're welcome. William, why care if it's going down when the covered call was at the money? Well, William, you don't know how far down it's going to go. So if I buy the 142s, right? If I buy the 142s, sell the 142s, I'm picking up $1.69. Great. Well, how do we know this here is not this right here? Okay? And then look, do we know what's going to happen the next day? No. Look, it went down. The next day, look, it went down. It went down, it went down, it went down, it went down, it went down. It keeps going down. Never buy it as it's going down. When it stops, okay, see it going down, 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 down? Now it stopped. Higher low, higher high. 2 days to the upside. That's what I'm looking for. 1, 2. That's where I would jump in right there. Well, I wouldn't because it dropped down lower. Okay, lower. Now it's higher. See? As he's going higher, that's when you jump in. Grab your 1%. Never buy it as it's dropping because you don't know how low it will go. It will go until it is done. Then it will turn around and go back up. And then there will be profit taking again, and then it will bottom out and turn around and go back up. That's all stocks do. They go down, they go up. They do not come to your house, wash your dishes, take the dog out for a walk, and mow the lawn. They don't do that. They go up, they go down. That is it. If you like a good stock, you like a good company, follow it. It will tell you exactly when the right time to buy is, and it'll tell you when to sell it. It gets to a high, people start selling, taking profits, and the stock starts to go down. It gets down to a certain level, and you get people like me saying, holy cow, Johnson & Johnson at 150? Yeah, I'm going to buy some of that. Me and you, we make up all this crap. We say when it's too high, and we say when it's too low. And we say, oh my goodness, it was at 157. Now it jumped up to 167. That's $10. That's $10 increase. I'm going to take my profits and run. Take my profits, and the stock drops. And then you have a lot of other people selling to take their profits. And then it gets to a certain point where it stops, turns around, goes back up. I've never yet once seen a stock that just went straight up and never came back down again. Never seen one. Okay, I think that's it. That's it. That's all the questions. It's past 11:30. I am done. I will turn into a pumpkin in about 20 minutes. You guys have a great night, and we will see you again tomorrow night. Same bat time, same bat channel. You guys have a great night, everyone. Come on. And you guys.